Bitcoin has taken another tumble. We have seen the Fed actually pause their interest rate hikes, but at the same time as doing that, said that to expect 2 more rate hikes this year, with no pivot in sight anytime soon. This potentially is incredibly bearish for Bitcoin and for the crypto space. We're going to be jumping down into the technical analysis of Bitcoin here, taking a look at what's been going on most recently and kind of where I think things are heading next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this video and take a look at what's been going on with BTC. So we saw ourselves yesterday with a bit of a move to the downside, a little after the Fed kind of paused interest rate hikes, but had the speech saying that basically everyone should be expecting at least 2 more this year. So what should have been positive was kind of then flipped and turned into a negative. So again, we saw the markets trying to ascertain what to do for a few hours, and then it was about 9 p.m. UK time, UTC +1. So you can see right here, we saw this big candle, this big move to the downside. Okay, now from a smart money concepts point of view, we are seeing a few things missing here. So this is why it's important that we understand how to understand smart money concepts, how to draw it ourselves, rather than just relying on an indicator. So in here, there's actually a fair value gap, but it's not being shown by the smart money concepts by Lux Algo indicator. So it's important that we are able to draw these things ourselves, because otherwise we wouldn't know exactly what's going on in his little range here. So let's kind of review what's going on, right? We can see that we are in a bearish structure. So you can see that right here. We started to see the structure change into a bearish state of play with this change of characterization. We got the break of structure to confirm it, and then yesterday we got another break of structure confirming that we are still in a bearish structure. So nothing positive on this 1 hour chart here to kind of lead us into that kind of thought pattern. In fact, I might actually kind of bring up, yeah, let's actually go into, let's do that. Let's come over into our 𝗕𝗘𝗪𝗔𝗥𝗚 and just kind of show you what's going on here, because what we've got is this fair value gap. Let me go ahead and draw that in. Okay, I'm going to draw it right in here and just pull this across, right? So this is the gap in question, 25,187 to 25,840. And this is created through an imbalance in the order books. Okay, we talk about this fairly often. So this imbalance in the order books is basically when too much selling pressure happens in this order book here, that there's not enough buying pressure to stop the price from going down rapidly. This is basically indicating to us an illiquid market. With this liquidity problem allows price to go down, as in the price has to go to where buyers are, right? If you're trying to sell Bitcoin and you just do a market order to sell Bitcoin, for example, well, the price is going to go and find wherever the buyers are. And then in this case here, they are down a little bit lower. And so this imbalance in this order books, i.e. there's too much selling pressure and not enough buying pressure, creates these gaps, right? This big institutional level candle. Now, we say institutional level candle because that's typically what would cause it. Sometimes you have retail fear that kind of seeps into the market here, and it could be that retail has kind of banded together to create such a huge move in the market. But unfortunately, more often than not, it's actually large institutional players that have the capital to basically move the market like that. So if someone with a large amount of Bitcoin decides, you know, this is just too risky, we've got years of potentially, you know, damage in the market before there's a pivot, they might be looking to kind of come out of their position, and as such, you kind of see these kind of candles appear. So with this gap that gets left behind, price likes to go back and put liquidity where it wasn't, i.e. price should be in some point in the near future moving up towards 25,187 to 25,840. It would fill that gap, and I think that's essentially where things are heading gradually. Okay, but before we can do that, we actually have to kind of do a few other things as well. So yeah, as you can kind of see here on 𝗕𝗘𝗪𝗔𝗥𝗚, yeah, big gap kind of left behind. Let's bring back our chart. Okay, so in our trading view chart, which by the way, guys, you can just use 𝗕𝗘𝗪𝗔𝗥𝗚 because it is also trading view. I just much prefer to have the bigger screen like this, as you can kind of see. But that being said, it is what it is. yeah, so basically what's going on here? Well, we can see that we're potentially going to have to finish off a 5-wave structure right inside here, which means we've still got a little bit more to the downside, but a bounce to the upside should occur afterwards in a very similar way that we saw this one over this side. Now, this basically would make a double zigzag pattern. Okay, so a zigzag pattern is an A, B, C. Okay, but actually, just reflect on that a moment longer. I think it might actually be a lot worse than that, because we potentially have this here as well. So there's a few different things that potentially are occurring here, and I don't think we've got anything to worry about with this level, but we'll check it just to make sure. Yeah, we're not. You're not near the 24,157, so that's okay. But as I've said many times before, we are kind of finding ourselves in a strange position. We find ourselves in nested 5-wave structures on repeat, and we've kind of either looking at big kind of zigzag patterns, or triple zigzag patterns and things like that nested inside each other, or we're nesting an impulsive structure and we're just in the very early stages. The problem that I have here is that we have a double zigzag right inside here, or a zigzag here, and then we potentially are going to be looking to come down again for that double zigzag, because it's unusual that you'd have a zigzag, a corrective move, and then a 5-wave move. A 3-3-5, yes, but it would be unusual. It's possible, but it would be unusual. So the expectation might be that we actually have some kind of 3-wave bounce, followed by another 5-wave drop, just to make a double zigzag pattern within this area here. But again, we can't rule out the fact that we have a zigzag up this side as well. So again, we can't look at that as a double zigzag if this is a 3-wave double zigzag in itself. So lots of things to kind of consider with that, but bounce to the upside is kind of what I would expect to occur, but the 5-wave drop here is an unusual position from a zigzag point of view, so leaning more towards those nested 5-wave positions and all that kind of stuff. So let's go ahead and reflect on where price is potentially heading here. That's exactly the same, so we'll just do that. So we should be looking at a final 5th-wave movement coming down to this range right here at 24,730 to 24,585 approximately. This would actually be where you would expect typically the 5th wave to end. It's where you would normally see it go. With that being said, though, there are many different types of 5-wave corrections. We've kind of spoken about this quite a few different times over the past few weeks. We have your standard 5th wave movement, which would be just your 5-wave impulsive movement. You'd have an ending diagonal, you'd have a contracting diagonal, an expanding diagonal, and as such, some of those can truncate, i.e. they fail to hit these targets. So for now, this is where we typically would expect it to go, but things could change a little bit, essentially, is what I'm saying there. So 24,585 to 24,730 would be kind of the expectations on that one, and then we bounce. And that bounce to the upside shouldn't cross higher than our origin here at 26,433. If it does, then this is simply just 335. A little bit odd, but 335 is what it would be, a flat correction, nothing too peculiar, and we would mark that up as a giant A, B, and C, which is not technically correct, but it would be a pretty decent way of looking at it overall without overcomplicating it for the video. But for the most part, yeah, that's kind of where we would expect it to kind of go. So Smart Money Concept says that we're bearish, Elliott Wave Theory says we're still bearish, and we expect further downside. Once complete, we'll probably look for a change of characterization on this 1-hour chart and look for the market to move on up. Okay, let's move to the daily. The daily chart has showed us with our first fair value gap actually getting hit. Okay, so we were talking about these 4 fair value gaps on our daily time frame. We've seen them for quite a few weeks, and we finally completed the first one. The first one was a gap that was left at 25,167 to 26,578, as you can kind of see here, marked up in yellow. We then have these 3 additional gaps lower in the price chart. Right at the very bottom, we have the 19,117 to 19,888. Second, 20,686 to 21,813, and then 22,150 to 23,976. So these 3 fair value gaps, and we won't go straight down and grab them all. It took some time to grab the first one, but the expectation will be that we eventually will come down and we will grab all of those fair value gaps. Now, that's for Bitcoin. When you imagine what the altcoins would do when that happens to Bitcoin, well, they'll be basically bleeding out as well. We've seen a bit of a move, and we've seen new lower lows for many altcoins, and I think that's going to continue. I don't think we're going to kind of be out of the woods just yet. This is something that we've been talking about for months. This isn't anything unusual. We've been pretty much bearish even all the way through January through to now. That hasn't changed. Ultimately, there was no reason for us to be in a bullish market. We kind of spoke about that many times. So the idea of the move to the downside here, Bitcoin doesn't have to go into a new lower low, but I suspect that it probably will at some point. But for now, these are the fair value gaps that are most of interest to me. Obviously, we also have a CME gap at about 20,000. Let me go ahead and see if I can pull that one up. Just bring that in here. Coming in, let me turn off that to make it a little bit easier. And where is it? Oh, it's here. Yeah, I can see it. Okay. So it is this one right in here. Okay, so we have the CME gap, as you can kind of see right here. This is being 20,330 and 21,110, and there's also the CME gap up here, which is the one that loads of people were speculating it will go to, but that's obviously something for much later on. Now it definitely doesn't look like it's something that we can consider a viable option. Still technically possible, but I don't think viable. 34,455 to 35,180. So all in all, there's two CME gaps, and I think the ones that we're heading down towards are down here, unfortunately. With that being said, though, I am expecting a bounce up. I would not be too surprised if we hit 30k again soon. But you know, for now, it's going to be interesting to kind of see how that kind of plays out overall. But yeah, I think for now I'm going to leave the video right there. If you have found it useful and informative, so why not go ahead and smash that like button? I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe? And yeah, why not check out BitGet as well? Affiliate link in the description below. It's my go-to exchange at the moment for absolutely everything spot trading and leverage trading at the moment. So why not check it out? If you're looking for a new exchange, move away from Binance, check out the affiliate link for BitGet in the description down below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.